today. The next one we've got a few more pending now for the rest of the year. Just some quick introductions before we get going. For those you don't know me, my name's Stu. I am the business development manager for Hodge. I cover all of Wales, across the M4 corridor to Reading, down the south coast into Southampton, and right the way along the bottom of the country and into Land's End. Joining me on the call today, just wanted to do a quick introduction for you. We have the lovely Lalana, and Lalana's recently joined us. Lalana is our new BDM for London and the surrounding areas. Lana's been with us now for 6 weeks or so. She has extensive background in the industry, in the later life industry, and across the specialist market. So for anyone who's in and around London, the Norfolk area, around that part of the world, down to Brighton, and you want to get in contact with Lana, by all means, pop your details in the chat facility, and we'll pick them up, or at the end, there will be a link to all our contact details as well. Also joining us on the call today, unfortunately, his camera's mic's not working, but we have Daniel Hughes. Dan is one of the part of our superb desk team. Dan, many of you will have spoken to, will help on the desk with your queries with regards new cases or any cases in progression at the moment. So Dan sat in the background, and hopefully on a few more of these calls, and we have his camera and his mic working. There he is, because his camera working.
There we go.
There he is. Dan's going to manage the chat facility for us today, guys. So if you've got any questions as we're going along, please feel free to pop them in there, and Dan will pick them up. If we can answer them here and now, we will. If not, we will look to move them and look at them later on and come back to you later in the day. All right. So the point of today's webinar is a bit of a bite-sized look into what we're seeing in the market, the type of customers we're seeing, and the old picture there. Don't panic. We're not actually changing what we're doing as a lender. I'm not about to become Mr. Whitby. This is just a little play on the part of the year that we are at the moment in the summer months. Although as I look out my window around the valley, it's raining. So yeah, we just thought we'd have a little play on the ice cream there and bring this sweet mortgage solution for your tricky, complex cases alive for you. All right. So what we're going to cover off in the next half an hour or so is all a bit ice cream themed. So we're going to look at vanilla versus Neapolitan. What those vanilla high street customers actually look like against your Neapolitan specialist customers of the world. What does a Neapolitan customer actually look like from a market perspective, and what we're actually seeing at Hodge? And then would you like a flake with that? How can we actually help you guys with these types of problem cases, and how we can get them across the line for you with some of our USPs? And I'll run through a couple of case studies of actual cases that we've had in over the past 6 months. So let's dive straight into it. Hence for the ice creams. And look at what a vanilla customer is against what a Neapolitan customer is. Now, as long as you guys who know me well know I've been in the industry for a while now. I've been a BDM on the road since 2016 and 3 years previously on a desk of Principality as well. And we always talked about vanilla lending. So your vanilla customers, your high street customers, your Mr. and Mrs. Joneses of the world, good incomes, no debts, good deposits, 2 kids looking to buy their forever home, no issues whatsoever. Your nice, straightforward customers. And when I first got into the industry, that's what it was. That was the majority of the business, was those high street customers, your vanilla types of lending. But the market since 2016 or even previous, let's go back a little bit further than that, has changed massively. And the whole idea on that Neapolitan ice cream is the customers now are not straightforward. They're not all vanilla. And the reason we chose the Neapolitan ice cream is because if you look at it, there is a vanilla within Neapolitan. So even if you've got an application, you might have one customer who's squeaky clean, no issues whatsoever. But the cause that we get quite often, the fact is you've got the guys on the other side then who can be the chocolate or the strawberry ice cream. They can be a little bit more difficult to deal with. And with Neapolitan ice cream, I don't know if you've ever had Neapolitan, it comes in that tub. You've got the vanilla, you've got the strawberry, you've got the chocolate, and you put it all in a bowl, and you don't just eat the one at a time, you mix it all together, and you get that lovely brown grey colour in the bowl, which, let's be perfectly honest, doesn't look brilliant until you taste it, and it's absolutely magnificent. It's the best thing you could ever eat, but it doesn't look appetizing at all. And that's specialist lending. It is taking those cases which don't always look the best, mixing all together and coming out the other side with a phenomenal result. And that is what we look at when we say the Neapolitan ice cream. That's what we mean. It's everything mixed together and coming out the other side with a positive result, both for you, but more importantly, then for the client, where they'll have those difficulties from the start. So, what does a Neapolitan customer actually look like? Is it someone with complex income? Is it an older borrower? Is it potentially a first-time buyer with a low deposit and even less a perfect credit history, address history? Sorry. Is it someone that wants interest only? Now, if you look at the screen there, there's three very different people. And in reality, Neapolitan or specialist customers could be anyone. It could be that lovely mix of the two or three colours we mentioned before. But very few mortgages now are straightforward. In fact, over half mortgages placed in the UK now, new mortgages, are deemed specialist. And the more restrictive that market becomes, the more mortgages will end up in the Neapolitan tub. Far more will become your chocolate, strawberry, or mixture of the three altogether. If we take interest only as an example, now we are what's known as an interest only lender. It is our bread and butter. We do it really well. We are specialists in the interest only field. But if we look at it as an individual product, who is it actually designed for? I suppose the other question is, who isn't it designed for as well? Because it's not the right product for every single customer. Is it simply for older borrowers, or does it have a place for the younger market as well? Now, again, anyone who's on my patch and has heard me talk at round tables or presentations, or even when I've been into the office, will know that I tell the story about when me and my wife took an interest-only mortgage out, and we did on the house I'm presenting from now in the Rhondda Valleys. We took a 95% interest-only mortgage with no repayment vehicle, and many like us did it. Now, too much interest only back when we bought ours, 2008, just before the credit crunch, was sold on day one. There was no plan for day two. What would happen after? Now, to put everyone's mind at rest, we flipped ours back to repayment 2 years later. We had a plan. We had a day two in mind. We were getting married. We wanted to keep the costs down because we obviously we had the wedding to pay for as well. And what we did is once we got married, got the honeymoon out of the way, we flipped back onto a repayment mortgage. But many customers out there don't do that. And I suppose that's where interest only kind of gets its bad rep from. The 1990s, early 2000s, less regs, everything will be fine sort of attitude. What interest only needs more than anything is good advisors, giving their customers all the options that are open to them, but not stopping at completion either. Is having those regular check-ins. Is the product still right? Have circumstances changed? And you could say the same for long-term mortgages, which is the buzz thing at the moment, 40-year terms. These should be reviewed regularly again. Have their circumstances changed? Has income increased? Is there room for an overpayment or potentially a term a term reduction? I suppose, what are we seeing in Hodge as Neapolitan customers? What's the type of customers we're seeing coming across our door? Many of you will have seen that over the course of the last 2 years or so, we have updated and reinvented our product set. We can now lend it from the age of 21 on our residential products, meaning we're seeing a different type of customer, a younger demographic coming through the door as well. Now, if we take that Hodge Resi product, which we've got, it's our term-based product, where you can use earned income right the way up until the age of 80 if needed. Since the beginning of this year, we've had over 600 cases submitted on that product. Of that 600, 62% were on a repayment. 2/3 of that were on terms over 30 years, and 12% of the total number of cases coming in were on a maximum term of 40 years. Now, these stats show that people are stretching those terms as long as they can. They're trying to keep their costs down, but also they're maximizing their borrowing potential. Now, with the average age of first-time buyer today is 39, it's a stat that's well presented in the market today. But even at 39, you're not doing a 10-year term. You're still looking at that longer term. Again, maximizing affordability, keeping your initial costs as low as they can be, with a day two plan lined up with a good mortgage advisor to regularly review with a plan of reducing that term where appropriate. All right. So that's the type of customer Neapolitan is. That, again, it's not every single customer wrapped up there. It's just some of the examples, ones we're seeing. But what I wanted to do was try to bring the type of customers that we're seeing now to life for you. So I want to introduce you to Fiona and Luke. Fiona Fiona's 30, Luke 27. They're looking at doing a purchase at 450,000, 71% LTV. Fiona is a barrister, Luke a paramedic, but they wanted interest only. Okay. Now, this whole case there, these two young couples coming together. They're not first-time buyers. Fiona's already had a property previously. She sold her flat, but this is the first property they're buying together. 30 and 27 looking at interest only, and people are thinking, well, why would they want interest only in this one? This being their first purchase together, this isn't their forever home. They don't have kids. The house is big enough potentially to have one child in, but they've got plans in the future maybe to have a bigger family. But what they know is where they've bought, those house prices are always going to increase. They've kept that equity in there. Equity again from the deposits come from the sale of Fiona's flat. There's savings involved in it as well. They've also had a gift from one of the parents as well on there. So the interest only stacks up for us in the area they're buying, and they've got an equity amount there which allows them to do the interest only side of it. It's not always about the equity for us. We can also use things in the background such as savings, pensions, other investment properties potentially in the background as well. But these guys who have stepped into this with a plan in place, they know what their day two is. They know this isn't their forever home. It might only be for the next 5 years they stay in this property. They know in 5 years they're not realistically going to pay a massive chunk off that mortgage, but they do know their house price is going to increase, increasing that equity, allowing them then for the next purchase to have a bigger equity share to put down more on that bigger property. The other issue of this one was Fiona's income. Fiona's a barrister, earning good money. And again, that was part of the reason why they wanted to try and keep those costs down. Now, no, the next purchase is going to be that little bit bigger, but also knowing Fiona's income is going to increase. Now, when it comes to barristers' income, sometimes they're not always paid up front. It's kind of like an invoice type of thing for them. And I know everyone's not going to have a barrister on their books. But the type of things we would ask for them is a projection from the chambers, as normally your next year is always going to be slightly higher. So we can look at that projection, looking at using enhanced income for them. We'd ask for details on the chambers fees, copy their payment summary as well. We will work with these types of customers to get them the max affordability. Now, I know there's people on the call thinking, well, I've never had a barrister come across my desk today. So what I want to do is bring a more normal, should we say, an everyday type of scenario, an everyday customer to you as well. This is Adam and Mandy. Adam's 35, Mandy's 30. And they're looking at 90% purchase at 270,000. Ad is self-employed, 8 months as a carpenter. Mandy's an air hostess. Now, their main sticking point is they've only been in the UK for 10 months. They've been in Australia for the past 3 years. They are both British nationals, but emigrated 3 years ago for work and have now decided to come home. So your problems there are threefold. You're looking at Mr. only having 8 months self-employed. Only 10 months in the UK, so obviously a credit history will be slightly less than normal, but they're also looking at 90%. Now for us, Adam, 8 months self-employed is fine. We can take a view on less than 12 months self-employed. Adam has been beer carpenter all his life. We've got 3 years track record in Australia of him doing it. We've got every single pay slip, so we can see a continuation of employment. We've got his business bank statements showing the amount of money coming through the door, so we know what he is earning. We've got an accountant's projection as well to prove that what he's going to pay his tax on as well. So showing that he's got enough income to support this mortgage, and again, a track record of showing it. The deposit is all their savings. Mrs. being an air hostess is fine. She's just changed from working in Australia to the UK, same company. Obviously moving from being paid in US dollars, now being paid in sterling instead. Now, these are the types of cases your high street are not going to have. There's too much on there that's going to cause them concern, or for them to say, do you know what, we're already getting enough straightforward, vanilla customers to the door. We don't need the Neapolitans of Adam and Mandy of the world. These are the types of cases that we at Hodge can help with. I've said this, I've been in Hodge for nearly 4 years, and I've been in specialist lending for coming up on 7. Specialist lending isn't about rate. Okay, we know we live in a rate society at the moment and people are trying to keep their costs down, but it is not about rate for you. Granted, we're not up in the 8s, 9s and 10s on the mark. We will always be competitive for you. But if you're picking up the phone and speaking to me, speaking to Lana, speaking to Dan or any of the rest of the team, you're ringing us because there's an issue. You're ringing us because they're either strawberry or chocolate or that lovely grey colour in the bottom of the bowl. You're not ringing me because I've got a rate that's 3%. You're ringing me because these people need a lender who's going to take a view on it and is going to be able to, you'll be able to speak to an underwriter and talk these cases through. So that's giving you two little examples of cases there. Now it's more about how we actually do that and what we actually use in our approach towards helping you, giving you that flake with your ice creams instead. We will use up to 100% of all income on cases. So what they've got, so you've got, go back to the examples we've got there. You've got Fiona using your barrister income, Adam self-employed. It could be mixed in potentially with rental income. We can even add pension income in as well if these customers are going that little bit older. Overtimes, bonuses, things like that. We look to use all of it for you. I'll just state there, we'll use earned income up to the age of 80, as long as it's plausible. Now you flip it back on to Adam again. Adam's 35. Am I going to do Adam a 40-year term up until the age of 75 potentially? Probably not. It's not fair on him. Why would I want someone the age of 75 still having to be a carpenter, a manual job? But I only wanted a 30-year term, taking them to 65. People are living longer. People are that little bit fitter. People are working that bit longer. But that is safe, responsible lender on our behalf as well. So if you've got people looking to work up to the age of 80, just sense check it with us. Find if we're comfortable and if you're comfortable as well in advising your customers that they can actually do their job until the age they're saying. Nobody wants to put a person in a place where they've got to work until the age of 80. Let's work together and try and get the right balance across that for the right types of customer. We kind of again also got the 6 times income for you for for people earning 75,000 in a household. So flip that back to Fiona and Luke. There is over 75,000 there in that household, so we can do 6 times income. So stretch that affordability a little bit further for them as well. And again, looking back at Fiona and Luke, interest only, stressed as interest only. So the term for them isn't as important. 30 and 27, they may only want a 10 or a 15-year term. They know that in 5 years' time, their circumstances are going to be different, and they may well want that bigger house to start their family. People are starting families later as well. This works ideally for them, and again, allows them to borrow that little bit extra to get what they want without stretching themselves too far, knowing they've got a day 2 plan in place to sell, move to the bigger house when they are ready to. And the complex income, as we mentioned previously, the self-employed with Adam already being self-employed as a carpenter, we can look at projections for you. We can take salary, dividends, plus retained profits off the back of it. We can also look to add retirement income in. So if you've got an older first-time buyer potentially, or even an older borrower who's buying but still working to 65, 70, 75. Dave, I'll catch you in a minute. I'll just finish a bit and I'll come back to you in a moment if that's okay. We will look to use retirement income built in as well. So we can take retirement income, state pension, private pension as well. Investments, as I mentioned, mixed income. We will just try and tailor it and use as much as we possibly can to get you as much affordability that is possible for your customers. And we do look at that tailor underwriting. Lan, I know you've been here, 6 weeks now. Have you had any experiences at the moment with the underwriting and some of the stuff we've done for you so far?
I think for me, excuse me, I think it's been quite eye-opening seeing how much the underwriting team really know and understand all of the different incomes. I mean, I've learned a lot about some of the complex incomes that I didn't even know about previously, like barrister incomes, that sort of thing, that I never came across even as an advisor myself. So I've learned a huge amount from them, and just how vast their knowledge and understanding of complex income is, but also that they really do try and maximize the income. I think I found that really interesting, and the fact that they'll look at the bigger picture rather than just try and fit that customer in a box. So they do feel like they go out of their way to really try and support those cases. Obviously where plausible, where there is strength, where the case has got legs. So I think in the sort of 6 weeks I've been here, that's probably been one of the biggest learns for me from an underwriting perspective. So yeah, that's been really useful.
Yeah, I always found that. So I've worked with other lenders before where it's been really difficult for even as a BDM to speak to your underwriter. And I know a lot of companies out there will say that, yeah, you can get hold of your underwriters and different things like that. But we are a small team. There's only 250 staff across the whole of Hodge. We work really closely with a lot of the guys on the underwriting team who are happy to answer calls, take calls, respond back to you, whatever it might be. And I think that's when it comes to special, that's what you need that tailored underwrite. You need that personal touch because they're not straightforward cases. Otherwise, you'd stick them in with Principality or Halifax or Nationwide, and you'd have an offer within 30 minutes. We're not that type of lender. We never will be. We are trying to get quicker, but yeah, we are trying, and we'll continue to improve the way we actually service your guys' applications. So that'll bring you towards the end of the webinar, guys. It was only a bite-size edition today that we're looking at. On the screen there is the QR code for you. If you scan that, it takes you through to your BDM Finder. You'll find my contact details on there. You'll find the Lana's contact details for London, the Southeast, and that part of the world. We've also got HEMA in the north, covering anywhere from anything from Birmingham upwards. You'll also get your desk BDM. So you've got Martin, Laura, who support me. You've got Joe, who supports Lana in London, that part of the world. And then you've got Kate and Alan, who support HEMA in the north. Dan's also available at any point on the phones, guys, for answering those new case inquiries, the chase ups and everything. And I know from dealing with Dan for the last 4 years that he's exceptional, especially when it comes to chasing through your solicitors. Having previously worked for one, he is like a dog with a bone when it comes to completions for you. So please use him and abuse him when you can. All right. I don't think I'm able to turn people's mics on to actually take questions that way. So if anyone does have any questions, please can you pop them in the chat box for us. I'll stay on for a couple of minutes to give you any questions on there. What we'll do is we'll take those questions away after, and we'll come back and answer you individually. So if you can put your questions on there, any contact details, and a telephone number and an email address, and we'll come back to you with anything off the back of it. But for now, guys, I'll leave you to the rest of your day. Thank you for your time, and go and enjoy a nice 99 if it's sunny where you are today. Thanks for your time.